Is your home helping or hurting your retirement plan? Let's take a look at some factors to consider to answer that question. Let's go ahead and dive on in. A lot of times people ask, should I sell my home? But that is not the right question to ask. A better question is my home strengthening or weakening my retirement plan? Because at the end of the day, that is really what you're trying to get to when you're trying to decide whether or not to sell or to stay. There are 4 ways that your home impacts your retirement. Equity growth, so that's the appreciation as your home appreciates and you pay down the mortgage. The difference between what you owe and what the home is worth is your equity growth. Ongoing expenses, taxes, insurance, maintenance costs, all of those have to be paid year after year. So you want to take that into consideration because that is going to impact your retirement as well. Cash flow, again, a part of ongoing expenses. How much money actually has to go out to continue to maintain my lifestyle in this home? And what does that look like over the next 10, 15, 20 years? And then last but not least is liquidity. What access do I have to cash by having this home if the need arises for me to have cash in a relatively short amount of time? How liquid am I? How easily can I convert some of my assets or a part of that asset into cash? All of these impact your retirement and impacts the way that your home is going to affect your retirement. So let's spend a little time thinking about what the hidden costs of staying are. First and foremost, there's property taxes that we know it's going to go up every year. If you're in Florida and you're in a homesteaded property, you can count on a 3% appreciation year over year unless there's a change in the market and we see a decline in values. But for the most part, we've been consistently looking at 3% year over year for the last several years. Insurance increases. We know that premiums over the last several years have gone up significantly. We went through a really tough time, 22, 23, 24 in terms of hurricanes impacting the region, and that has translated into higher insurance premiums. We're starting to see a reduction in 25, 26, but we're not back to the levels we were at before, so insurance still remains an area of significant concern for most homeowners. A third area to consider is maintenance and capital repairs. Your roof, your HVAC, plumbing, all of these are, as the home continues to age, will need some type of maintenance, which could cost from hundreds to tens of thousands of dollars, depending upon one, the nature of the repair that is needed and the significance of the element as it relates to the home. So, for example, replacing a roof might require you to spend thousands of dollars or will require you to spend thousands of dollars, whereas replacing a water heater may be a few $100s. So there's a big difference in terms of the impact, the financial impact that can have. Another thing to take into consideration is homeowner association assessments. If you're in a condo, that could be more significant than in a single family home. But if you're in a community that has an association that you are required to make payments to on an ongoing basis, making sure that you keep your eye on that and how that is going to be increasing over time, that is something that you have to take into consideration. And the fifth thing to think about is a hidden cost of staying, which is the one that most people don't think about because all of the others require out-of-pocket cash. It requires a cash outlay. The opportunity cost of staying, this is one that does not require a cash outlay, but what it is, you are forfeiting the return that you would have gotten on that equity had it been invested in something else, a mutual fund or some other portfolio that gave you a return on that investment. You know, the idea that a lot of times people think that the return on the investment is the appreciation in value of the home. The reality of it is that whether you have $0 in equity or you're in 100% equity position, your home is going to appreciate. So keeping the equity does not add to the amount of appreciation that you get from keeping the home. That it just speaks to, from a cash flow perspective, what are you walking away from by not investing some of that equity into a vehicle that could give you some type of a return on that investment. And in the interest of full disclosure, I am not a financial advisor, so I'm not giving you investment advice, but that's just something to take into consideration as you're walking through this process and try to think about where you are and what makes the most sense financially overall. So let's talk a little bit about equity versus liquidity. All right, you have $500,000, $500,000 of home equity that's tied up in your property. The reality of it is that retirement does not just run on the appreciation. It just doesn't run on equity. It means accessible cash. So if you have $500,000 in equity and only $50,000 in accessible savings that is available when you need it, you could have a liquidity situation. Because again, if this is all the cash, the accessible savings that you have, that you're expected to take you into your retirement, it won't be long before that $50,000 dwindles. God forbid there's some type of major repair or some health emergency that is going to require funding. Retirement requires liquidity. Appreciation is important because it's going to continue to have that equity grow and increase, but it's also important to think about, how do I access that equity? How do I access that asset in the event that I need it, so that I have a secure and safe retirement and I can get the benefit of the work that I have done by amassing this equity over time. So when is your home helping? We started off by saying, when is it helping and when is it hurting? These are the factors. If these factors are in place, chances are your home is helping your overall retirement plan. And that's if your mortgage is low or it's been paid off, minimal housing debt to go into retirement, that home is helping your retirement plan. If the cost to maintain the property, insurance and taxes are manageable and you're staying within budget, then that home is probably helping your retirement plan. If the home that you're in aligns with your lifestyle, if the size and the location and access fits your needs, then it's probably helping with your plan. Bear in mind that as you age, things change. I've worked with many families who have chosen to sell the home that they were in for many years because the primary bedroom is on the second floor and they're not comfortable doing the stairs. So as we age, our requirements change. I've had other clients who've downsized because the children are out of the home. They don't need a 4 or 5 bedroom property anymore. They need something smaller. And so there are a variety of reasons why we downsize as we're approaching retirement. But if the home that you're in fits your needs, if this is where you want to be and it's meeting your needs, then absolutely that is helping your retirement. And then last but not least is legacy planning. Does it fit into your plan for what you want to leave your heirs? Does it support your goals for leaving a legacy? If it does, then the home is helping. When is it hurting? And it's hurting when the opposite set of circumstances are in place. So if we're finding that it's becoming more expensive, we're having rising insurance premiums, because insurance has become quite a factor for us in our market as it relates to affordability. If you're finding that there are things that need to be done in the home, but you're deferring, you're putting off doing them because you don't have the funding, repairs are being postponed due to costs, that home might be hurting your retirement plan. If you find yourself where you're house rich but cash poor, your equity is locked up, you don't have any flexibility, and it's creating financial stress on you. So it's creating anxiety. You're concerned about meeting payments. In all of those circumstances, the home is not helping your plan. It is hurting you, and you may want to take a closer look to see what you can do to make a change and mitigate that. So there are many options beyond sell or stay, right? A lot of times people feel that their only options are to sell or stay. And as I talked about earlier, downsizing to the right size and the right cost and can free up some of your equity, and that might be a solution. Relocating to a different area with a lower cost of living, that is also a factor. What I've seen some people do is move out of the home, move into something smaller, and rent that property out. So they rent it. The asset is now generating income. For whatever reason, they didn't want to part with it. So they moved out, they rented it, and they either purchased or for themselves rented a place to stay in, a home to be in. That changed the dynamic completely. And then, of course, there's the option of looking into potentially a reverse mortgage, where instead of you making payments, you're receiving payments. That can be an option. But again, we want to make sure that it aligns with all of the other goals that you have as it relates to legacy and estate planning, because that is absolutely an option, but it will impact your estate when you pass. I recommend considering doing a retirement impact test. What is the annual cost? How much is it costing you per year to live there? How much equity do you have that you're not investing because it's tied up in the home? And how much financial flexibility do you actually need to have control over your retirement? My goal for you is to make sure that this is a good financial decision. So if staying in your home is in your best interest, both from a lifestyle perspective and financially, 100% you should stay. If it's not, then let's look at what the options are to be able to have you transition into something that is more suited to where you want to go and help you to continue to have as much financial independence and financial resources as you can throughout your lifetime. So if you're wondering what your overall situation is, I would invite you to let's run the numbers together. It's important to remember that while real estate is emotional, there's a lot that's tied up in there. Retirement is mathematical. It is a simple calculation. It's what comes in versus what goes out. So let's get together, assess your full housing cost picture, model your equity earning potential, and then align your home decision with your retirement plan and what makes sense for you. If you'd like to go over your financial options as it relates to stay or sell, please feel free to reach out to me for a free consultation to discuss your specific situation. Visit my website at simplyaskSharon.com and schedule an appointment that's convenient for you. I hope you found this video helpful. If you did, please consider liking it as well as subscribing to my channel so that you can be notified when new videos are posted. I want to thank you so much for watching, and I hope to see you the next time.